Today, we're going to talk about something really important, RWA, which stands for Real World Assets. Lately, RWA has been super popular in the crypto space, but I've also noticed that there are a lot of fake RWA projects popping up in the market. Even my elders have been fooled. What's more frustrating is that they don't believe my advice as someone who works in blockchain. So I decided to make this video to explain what RWA really is. Also, let's talk about how to guard against scams that pretend to be Web3. If you're interested in RWA or have even fallen into a pitfall, don't forget to like, save, and share this video. Let's get started. Let's start by talking about what RWA really is. RWA stands for Real World Assets, which basically means real world assets. In simple terms, it's about taking physical assets from the real world, like real estate, bonds, gold, and stocks. Even art can be tokenized using blockchain technology, turning it into a digital asset on the chain. These digital assets can be traded and circulated on the blockchain, which theoretically boosts liquidity and transparency. At the same time, it reduces transaction costs. For example, in the traditional world, if you want to invest in a property in New York, you might need a couple of $1 million. You still have to go through some tedious transfer procedures. But on the RWA track, this property can be split into 1,000 tokens. You only need to buy one token to get a share of the property's profits. The barrier has really been lowered. The core idea of RWA is to use blockchain's smart contracts and tokenization to bring traditional financial assets onto the chain, connecting the traditional finance world with the crypto space. That's why RWA is expected to be the next big thing in Web3 and DeFi. Here's the key point. The underlying assets of RWA have to be real and verifiable, like US treasuries, gold, stocks, and so on. Let me refer to them as they for a moment. Since the video is going on Bilibili, it's kind of a RWA because they're pegged to the value of cash in US dollars or US treasury bonds. Why is RWA so popular? Because it really has the potential to change the financial world. One thing is its high liquidity. You can trade on-chain assets 24/7 without any geographical restrictions. Another thing is the low barrier to entry, so regular folks can get involved too. Another thing is transparency. As long as we check the Blockchain Explorer, the on-chain data is public, which makes the flow and trading of assets more transparent, and theoretically, it can reduce fraud. As of May 2025, the total market cap of the global stablecoin market has reached $246.3 billion. Green T and Blue C together hold 86% of the market share. For example, HSBC launched a gold tokenization platform in 2023. Turning physical gold into on-chain assets is a big deal, but more importantly, RWA is getting more and more integrated with on-chain financial products. For example, on-chain ETFs and stock tokenization are really taking off. You can directly buy tokenized ETFs for the S&P 500 on the blockchain or hold on-chain stocks for companies like Apple and Tesla without going through traditional broker accounts. It's super convenient and saves on fees. But here's the catch. With such a great opportunity, why are there still so many fake projects out there? RWA sounds great, but a lot of projects are using the RWA label, and they're actually Ponzi schemes. My relatives almost got scammed by one of these so-called RWA projects. They're promoting that if you invest in their token, you can share in the rental income from luxury homes in Dubai. But when you look into it, there's actually no real underlying assets. This is a common scam with fake RWA projects, claiming that their tokens are backed by properties, gold, or US Treasury bonds, but in reality, there's no verifiable proof of any assets at all. High returns promises. They keep throwing around numbers like 20% a year and guaranteed profit. That's pretty much impossible in the real financial world. Then there's this complicated and unclear setup. The project team uses a bunch of technical jargon to confuse people. For example, smart contract dividends and on-chain mapping sound cool, but they don't explain how the assets get on the chain or how to redeem them. Plus, there's no regulatory license. Proper real-world asset projects need to meet financial regulatory requirements, like having a legitimate license in places like Hong Kong or the US. But these fake projects often have no qualifications at all. Some claim to tokenize US stocks or ETFs, but in reality, they just issued some empty promises, and you can't actually redeem any stock returns. Plus, some of these projects use decentralization as a cover-up. It's really just fully controlled by the project team, and the funds could disappear at any moment. It's even more heartbreaking because people like my elders, who aren't familiar with blockchain, can easily get lured in by high returns and the flashy Web3 buzz. They didn't even listen to my advice and thought I was just young and clueless. So I really hope this video helps open their eyes. The good news is, regulations around real-world assets, RWA, and stablecoins are tightening worldwide. This helps to sift through quality projects while filtering out the fake ones. Recently, Hong Kong passed the stablecoin bill, which plans to set up a licensing system for Hong Kong dollar stablecoins, requiring them to be backed by banks or major financial institutions. Assets need to be transparent and auditable, which gives a compliance boost to the RWA space and helps Hong Kong become a global Web3 financial hub. It's expected that banks and fintech companies will be the first to get licenses issued, following the trend in the US. In May 2025, the Senate passed a procedural vote for the Genius Act, which marked the start of a federal regulatory framework for stablecoins. This laid the groundwork for the legitimacy of tokenized assets like on-chain ETFs and stocks, and it's expected to encourage more traditional financial institutions to roll out compliant on-chain financial products. As someone in the blockchain space, I see this as a big step forward. I've put together some helpful tips to help you avoid the traps of fake RWA projects. First, make sure to check the underlying assets of the project and confirm if there's a third-party audit report. Also, keep an eye on the regulatory qualifications of the project team. Whether the project is registered and holds a legal license in highly regulated places like Hong Kong, the US, or Singapore is crucial. Projects without a license carry a lot of risks. Also, make sure to verify the redemption mechanism to ensure that RWA tokens can be exchanged for real assets. For example, check if on-chain ETFs can be converted into actual stock returns. Projects with unclear mechanisms often have issues. Also, be cautious with projects promising annual returns over 10%. High returns usually come with high risks. Finally, check the background of the project team. Legitimate projects will have
If you want to learn about developing on the Solana chain and the EVM chain, make sure to follow our channel for more related content. If you'd like to join our community, you can visit our website, where you'll find a link to join our Discord server. See you there.